Hello friends, welcome to Trading Income, and in this video we'll discuss how you can start your trading journey even if you have no trading knowledge or experience. So this is a 7-step complete guide for you to start your trading journey and start earning money from trading. So these are the points which we will discuss. 7 steps: capital, type of trading, trading strategy, risk management, trading psychology, execution, and journaling. So this is we will discuss each of this in detail. So this is going to be very much valuable video. Stay till the end of this video and take notes. Keep your pen and paper ready and start taking notes. So before that, if you're new to this channel, consider subscribing it because we keep on posting valuable trading videos in this channel, and also turn on the notifications. So with this, we'll start the video. The first point in starting your trading journey is capital. So how much capital should you start with? Many have this confusion. So let's discuss. So according to me, minimum 1.5 lakhs capital you should have, or you should start your trading with. So now you may say that you can also start your trading journey with less capital, say 2,000, 5,000, 10,000, 20,000, 50,000. Also you can start, but there are some problems with it. We'll discuss them one by one. So what are the problems with starting with less capital? So first thing is you will not be serious. Seriousness will not be there, because suppose you start with 2,000, 5,000 rupees. So you will think that even if my money goes, it's not much problem for me. So you will not be very much serious. But if you start with a big capital, say 1.5 lakh, 2 lakh, 3 lakhs, then your seriousness will be there because your capital is more. Bad habits will be formed. So what happens is, what I generally observe, people start with 2,000, 5,000 rupees and they start doing option buying because they want to trade options. So doing option buying with less capital is gambling. That's why most of the people lose money here in stock market trading. So bad habits are formed. If you start with small capital, your attitude is of a gambler, which is wrong. So this is another disadvantage. Brokerage will be high. Even if you make good amount of money here, which is next to impossible with less capital. So even if you make some profits, brokerage will be more than your profits. So eventually you will be in loss. So that's another case. But if you start with uh, uh, 1.5 lakhs or 2 lakhs, your brokerage will not be that much compared to your profits. So that is the case. Your absolute returns will be less because your capital is less. Suppose you start with 5,000 rupees. So your returns will be less. It's obvious. You can make 3%, 4%, 5% return. But 5% of 5,000, how much is that? That is 250 rupees. So that is very much less. Although you made 5% return on the capital, which is very great returns, but your absolute return is less because your capital is less. But if you do that 5% return on 2 lakh capitals, so that will be 10,000 rupees, which is good. So this is another disadvantage with starting with less capital. And if you make 200, 300 rupees in a month, then you'll be discouraged. And you'll form bad habits, you lose capital, and you will quit. You'll quit it. So these are all the disadvantages of starting with less capital. So I would recommend you to start with a minimum 1.5 lakhs capital. So when you start with this much capital minimum, then you should have realistic expectations. Your expectations should not be to double your money in 1 month or 15 days. So that should not be your expectation. Your expectation should be realistic. Your target should be around 2 to 3% monthly returns is good, realistic expectations from stock market trading. Focus on one instrument. Like people, what I see is new people, new traders, they try to focus on many stocks at a time. So they try to trade many stocks. So focus is not there. So focus on one instrument or one stock. Suppose you are trading in Reliance, then trade in that stock only. Don't select any other stock. So focus, when focus will be there, your performance will be better. So this is the first point, capital. Now moving on to the next point, which is type of trading. So what are the different types of trading? Broadly, there are two: discretionary and system. In discretionary trading, what happens? There are no fixed set of rules, like where to enter, where to exit, where to put stop loss, where to have the target, where when to start trailing your stop loss. So nothing is fixed. It's random. It's according to your conviction, according to your gut feeling, intuition. So this is discretionary trading. Most of the people, new people, do discretionary trading only. So other type, what is system trading? System trading is fixed set of rules. If you have a fixed set of rules, like when to enter, where to exit, where to put stop loss, where to put target, so your everything is fixed. So that type of trading is called system trading. So now, according to me, most of the people, they do discretionary trading and they fail. So I'm not saying that discretionary traders don't make profit, but they make profit, but probability is very less. Probability of being profitable in discretionary trading is very much less than in system trading. So it's logical decision to go with system trading, because your probability of being profitable trader increases with system trading. So that's why it's preferable to go with system trading. I'm also a system trader. So this is the thing. Now next step comes intraday or positional. What should we do? In intraday, what we do is we start our positions and end our positions within a day. Entry, exit, everything before the market ends, our position ends. So that is intraday. In positional, what we do is, if I take a trade today, I may exit after 2 days, 3 days, 5 days, 10 days, depends on me when I want to exit. So I carry forward my trades. That is positional trading. So you have to decide whether you want to do intraday trading or positional trading. Okay. In positional trading, there are risks of overnight risk, like gap up, gap down, circuits. So lower circuit, upper circuit. So that type of risks are there. Overnight risk is there in positional trading, whereas in intraday, that is not there. So I prefer intraday trading. So you can decide on your own which type of trading suits you. Now the third point is trading strategy. Now you know how much capital you require. Now you know which type of trading you are comfortable with. Now next comes the strategy part. How you can design your own strategy. Now we'll see that. So trading strategy. Whichever strategy you use or design, do it for 1 year. If you follow one strategy for 1 year, you will definitely get some good results or positive results. So, and how to design your strategy. So we will discuss this now. How you can do that? Open the chart in 15-minute time frame. Just now I said that trade only in one instrument. Just select one instrument and trade only in that. So let's suppose you have selected Bank Nifty. So Bank Nifty index chart, you open that in your software, in your this thing, demat account or trading view, wherever you open that, select the time frame as 15 minutes or 5 minutes, it depends on you. And what you do is observe for the last 1 year. Observe the chart, 15-minute chart of, say, example, Bank Nifty index in 15-minute time frame for the last 1 year. So what will happen here is you will see various patterns. They keep on repeating. They keep on repeating. So you will get that. You'll get that if you observe, just observe. Don't do anything. Just keep on observing. Okay. Then you will see that various patterns keep on repeating. Then write down 2 to 3 patterns which you see that keep on repeating again and again. Okay. Now what you do, backtest these 3 patterns for last 1 year. Again do the same process for the last 1 year. Say the first pattern you backtest for 1 year, second pattern you backtest for 1 year, third pattern you backtest for the same 1 year. Now see the results. Now that if you would have traded that, how many points you would have got. So whichever pattern gives you more points, that would be your strategy. Okay, that would be your strategy. Just finalize that strategy and you're good to go. So quickly we'll see in 2 minutes the chart of Bank Nifty in 15 minutes, and try to see the patterns which keep on repeating. So as you can see here on the screen, this is the Bank Nifty index 15-minute chart. So what I said is, just keep on observing the chart. Like this is 24th January chart. This is the chart. Then this. See how the candlesticks are formed. These are the candlestick patterns. See how they're formed. Like it goes up, then it went down, then sideways. Here the market went up, then down, then up, then down. So just keep on observing. Here sideways market, this sideways market. See here went up, then went down, then went up. So just observe this for 1 year, that is 12 months. Then you'll see that some patterns keep on repeating again. And like I will give an example. See this pattern. See this candle, red candle, and this green candle is covering this red candle almost. Almost this complete candle is covered, not completely, but around more than 60% of the candle is covered by this green candle. So this type of candle is called engulfing candle. So after that, see what happened. Reversal happened. It was going down, this engulfing candle came and price went up. So you can from this you can create your own strategy. So I have given you just one idea. Okay, see here also. This is another engulfing candle. This again engulfing candle. So accordingly, you can decide and design your own strategy. So now coming back to our mind map. So this one. So this way you can design your own trading strategy and finalize one pattern and trade only that pattern for the next 1 year. That way you can become profitable. So next comes risk management part. How to manage risk. Now you have the strategy. Now you should manage risk, because share market is risky. Trading is risky. We have to manage the risk. We have to keep the losses in control. So how can we do that? Per trade, risk less than 1% of your capital, and per day risk less than 2% of your capital. If you do just this thing, if you just follow this thing, you will survive in stock market trading for a long time, for a very long time. Risk less than 1% per trade and risk less than 2% per day of your capital. This way you can survive in stock market for a very long time. Losses are part of trading. Keep them small. The only thing you can control is losses. You can't control how much profit market can give you, but losses are in your control. So keep them small. So we are in the middle of the video. If you are liking this video, then if you're liking this video, share it with your friends and turn on the notifications, and we'll move to the next point, which is trading psychology. So your mindset also has to be proper. There are two biggest emotions in trading: fear and greed. There is fear of losing money, and there is greed to make more money. So these two are the biggest emotions in trading. We have to control these emotions to make profits from trading. We should control them. And we should develop the skills of profitable trader, which are this: discipline, consistency, patience, and perseverance. We should have discipline in following our trading rules. We should follow the rules consistently. We should have patience to wait for our trading setup to form, and we should persevere. When the times are tough, we should persevere. We should not quit. If you quit trading in between, you will not become a profitable trader. But if you keep on practicing, if you keep on improving, if you keep on rectifying your mistakes, and if you don't quit, you will definitely become a profitable trader and start earning good amount of money from trading. So develop skills of a profitable trader. So coming to the next point, sixth point is execution. Sixth point is execution. So now you have the trading strategy. Now you have proper mindset. Now you should execute your strategy like a machine, like an machine, like a robot. You should execute it. There should not be any emotions attached in execution. Execute one strategy for the next 3 months, minimum 3 months. You execute one strategy which you have designed, then you'll see some good results. So there are two options. Either you can execute manually or you can do it via algo. So if you do it manually, there are some problems. We'll discuss. If you do it manually, it depends number of trades per day. How many trades your system is taking per day? If it is 1 or 2 trades, then it's okay. You can do it manually. But if your system is giving you 10 trades in a day, it's very difficult for you to execute it manually. Or if your system is having some adjustment strategy, then it's very difficult for you to do it manually. Okay. So how can we reduce? So we should reduce our trades, number of trades per day, if we want to do it manually. How can we do that? By increasing our time frame. If you're using 5-minute, 3-minute time frame, just increase your time frame to 15 minutes. Then your number of trades per day will reduce, and then it will be easier for you to execute manually. Okay. So this is how you can reduce your number of trades per day, by increasing the time frame. And the second way is by algo. If you do it via algo, then it doesn't matter how many trades your system gives, because laptop or system computer is taking the trades for you. So this is the case. So the thing is, lesser the screen time you give, better your results will be. Okay, the lesser the screen time you will give, better your trading results will be. So it's always algo trading is the best thing you can do if you can afford it. Nothing better than that. But if you want to do it manually also, then see that your system gives you only 1 or 2 trades per day. So moving to the next point, which is, now you are executing your strategy properly, emotionlessly. Now the next part is journaling. Journaling is also very much important. Journal your trades per week, every week, so that you can track your trading performance, so that you can get the feedback where you are going wrong, so that you can improve your performance and keep learning. Always keep learning, because there's no perfection. We have to keep on learning, keep on improving, so that our trading performance can increase, so that our income from trading can increase. So these are the 7 steps using which you can start your trading journey, and you can start earning money from trading. Okay, people are making lakhs and crores every month from trading. Some people are doing it. Certainly they're doing it. You can also do it, but your approach has to be proper, your attitude has to be proper, your mindset has to be proper. Okay, you have to develop the skills of profitable trader. You have to control your emotions. You have to manage your risk. So there are many things, but you can do it if you follow the step-by-step approach. So this is the 7-step approach using which you can start your trading journey. I hope you liked it. And if you want to learn more about this, more about trading, if you want me to help you in your trading journey, or if you want me to help guide you in designing your strategy, then you can register for my next trading webinar masterclass, where I will teach you how you can design your own trading strategy. So link for that is in the description. Also, we have our own private Telegram community, where we keep on sharing updates about trading videos, about trading posts, about my trading performance, about my profit and loss. So you can join that Telegram community also. Link is in the description. And you can register for the live masterclass. Link is in the description. And if you like this video, share it with your friends, and comment useful in the comment box, so that people can know that this video is useful. Subscribe to our channel if you are not done till now. Turn on the notifications, and see you in the next video. Till then, wish you all profitable trading.